The truth is not what you want it to be. It is what it is, and you must bend to its power or live a lie. Miyamoto Musashi. And my friends, we talk about the truth all day, every day here at chartingwealth.com. What is the truth? It is price movement. It is not what the talking heads tell you on TV. It is not what the financial press writes. It is price movement. That's all that matters. And of course, the biggest thing that matters to us are our weekly vertical crossovers. They are the key to everything we do here. Yes, the 2-day recrosses can be very helpful, but most importantly are those weekly vertical crossovers. Those are the huge shifts in greed and fear when the market turns over going down or turns back over going up. And we see those clearly on our charts. That is what we're all about. Let's jump into these charts today. We see stocks are up, bonds down, gold reaching, I think I saw this earlier, the highest highs they have seen. So let's jump into the market and check all of that out. The S&P 500 up 0.73% for the day. Now pay attention to the candle as we see it forming. Look, it's not reached a higher high this first day. We see the price percent oscillator losing a little bit of energy, derivative oscillator losing energy. It's just the first day of a 5-day candle, but we pay attention to it as it is drawing. First day of the 2-day candle. Check it out. We see the price percent oscillator had crossed over going up. We've talked about that. Our jumping in point on the recross was somewhere around the 318 mark, reaching a high of 326.12. And of course, it started dropping over close of the day, 323.22. But my friends, that is a good deal higher than 318, isn't it? So as we continue to watch, of course, paying close attention to whether or not there's going to be a crossover going down when that 2-day candle ends, we will pay close attention to that. Of course, we have violated the 4-hour trend line and the 2-day trend line. Those are all warnings that can sure cause you to pull out, take your profit, and be happy. We saw the 4-hour trend line on this 4-hour chart violated. That was on Thursday afternoon, down Friday, and then up a little bit on Monday. So again, pay close attention if you are still in, and remember, when you start seeing these trend lines violated, they tell you things. How do you make the call on what to do? It's called practice, my friends. That's why we talk about practice trading. That's why we talk about using your trade worksheet, your daily market worksheet, and your weekly market worksheets. Those are all available in the show notes at our YouTube channel, at our website, chartingwealth.com. If you're listening to the podcast, you'll see it in the notes there. The PDFs are available for you to print out for free. And we encourage you. There's also trainings. In fact, I'm going to scatter those throughout today's video for you on how to use the daily market worksheet, the trade worksheet, and the weekly market worksheet, how to fill them out properly. We've got great trainings that show you how to do it. So follow those, please. Now, we see that's where the weakness is occurring on the S&P 500. So again, pay close attention to that. Continue to watch this weekly candle, and of course, in particular, that 2-day for a crossover going down if you're still in that practice trade. Let's go to the NASDAQ 100, up nicely, almost as much as gold, 1.78%. What do we see going on the NASDAQ 100? Well, we have a red open box candle, almost a doji forming after the prior weeks. We see the price percent oscillator is about flat, derivative oscillator losing momentum. Go to that 2-day chart. Remember when we had that 2-day crossover going down? That happened on Friday. And where is our arrow? There we go. And again, this is how easy, for those who are watching and not listening, the beautiful thing about TC2000 and freestockcharts.com is how easy it is to do everything online. I am using the actual web version. So I'm just doing it. I can use mine, sign in on any computer anywhere in the world, as long as you got an internet connection. My charts are there, and I love that. And I'm actually doing this on an Apple. So again, whatever, as long as you have an internet connection, you can use the web-based version. It is beautiful. Saves everything for you. I love it. If you follow the link in the show notes, there is a discount for you available, $25 off if you subscribe to any level of TC2000. If you're serious about charting, then I encourage you to get serious about TC2000. I love it. Used it for many, many years. So what we see happening is, of course, we're not reaching a lower low yet, but we do see, again, the average pace, which is what Heikin Ashi candlesticks are all about, showing us sitting right there on, actually penetrating through the weekly trend line, which is not good. Derivative oscillator gaining downward momentum. And again, I did tell you, price was up for the day, but what we are seeing with our price percent oscillator and derivative oscillator and Heikin Ashi average pace candlesticks, we see that down movement. That's on the 2-day chart. Now on the 4-hour, we see where things were up in the morning, further up in the afternoon. Price percent oscillator is negative, by a little greater than flat. Derivative oscillator losing downward momentum. But again, when you have that crossover on the 2-day chart, seldom a good reason to stay in. In fact, hopefully you got out before you had that crossover. But if you are waiting for an opportunity to jump back in, you're going to want to pay attention and see if there happens to be a recross like there was back on the 6th when we had that 2-day recross, a jumping in point around 257 up to a high of 266, which was quite beautiful in a rather short period of time. So that is where we are, my friends, on stocks. We're going to leave stocks. We're going to go to bonds, down 0.37%. Now look at bonds. This is interesting. We are going into the 7th week of up movement and still not enough energy to have a crossover yet. Well, if stocks, again, continue to go up, that may be a long time happening. But we continue to watch bonds. Price percent oscillators about flat. Derivative oscillators positive. Again, the high last week, let's see, 169.92. The high so far this week, 170.30. So it has reached a higher high. We'll watch as the week goes on. 2-day chart, again, continuing to move up. Price percent oscillator moving up, losing a little bit of energy from the prior week. Derivative oscillator moving up still. It's the first day of the latest 2-day candle, 4-hour chart or half-day chart. Up in the morning, pulling back some in the afternoon. That's where you get that 0.37% down. And again, we'll continue to watch. Just keep in mind we don't have a trade here because the weekly is down and the 2-day is up. We have to have both the 2-day and the weekly moving in the same direction. Now gold, check out gold. Look at the high on gold. We don't see, let's see, what's the highest high we've got on gold? 181.41 it looks like, and 182.23. So again, how high did it get during the day? Got up to a high of 182.83. So again, closed the day at 182.23 is what it appears. So is that not beautiful? And of course, how did we come about this nice trade in gold? Of course, we had the weekly vertical crossover going back to the 26th of June. Right there at the end of June, what happened? Well, we had a weekly vertical crossover going up somewhere around the 166 buy point. And again, like we told you, a high of 182.83 in 4 weeks and 1 day. Is that not gorgeous? Yes, that is gorgeous. Price percent oscillator moving up, derivative oscillator gaining upward momentum. 2-day chart. 2-day chart, look at that. This is just the first day of the latest 2-day candle, bounding well above the Bollinger Bands, which are, of course, volatility bands. Price percent oscillator spiking up, derivative oscillator gaining upward momentum. 4-hour chart, way up in the morning, slowing down in the afternoon. That gold trade made up for the fake out, did it not, my friends? Again, trust your weekly vertical crossovers. Of the 13 we have had this year, only one. That was that down move in gold back on June the 5th that faked us out for a very brief period of time and then crossed over going up. Those of you who trusted your charts, you've made out just beautiful. Folks, that's where we are as we end the day with our first 4 big charts. We still have 3 more charts to cover for you, but it is gorgeous. Thank you so much for being with us. We are now going to move on to Bitcoin, real estate, and oil. Hey, if you want to know what we do here at the channel on a daily basis, you want to sort of supercharge that initial training, you need our book, Charting Your Way to Wealth. We have a signed autographed copy for you. Just follow the link in the show notes to our Square page. If you live overseas, you can always email us, cw@chartingwealth.com. We'll send you a PayPal invoice and get your book out to you wherever you are in the world. Now, let's jump into Bitcoin. Wow. Bitcoin up for the day. Is this right? 8.87%. Wow. Check out Bitcoin. I mean, hammering up. We see the price percent oscillator spiking, derivative oscillator going from negative to positive first day. Look at that big old candle. That's not as big as the candle we see back on the week ending May the 8th, but it's a big candle to start the week off with. Go to the 2-day chart. Look at that baby. Boom. Crossed over, going up. Now, don't forget, what have we been talking about, friends? We've been talking about the weekly being a confirmed up move, waiting for that 2-day chart. When's your jumping in point on a 2-day recross? It's not halfway through the candle. What do you look for? You want to see if this action is still happening at the close of the candle tomorrow. That is on Tuesday. That would be your point to potentially jump into a 2-day recross on a practice trade on Bitcoin going up. Now again, how do you know if this works? Well, you go back in time and of course you backtrack. You practice trade. That's what this is all about, is learning how to do things by doing things. And the special training for you today is stop analysis paralysis. Limit your indicators. So take that training too. It will help you in all aspects of your practice trading. What do we see on the 4-hour chart? Look at how things zoomed up in the morning and dropped back, and then we see another up candle in the afternoon. Price percent oscillator just spiking up. So again, see how much of this wild gyration maybe slows down tomorrow, and if you get a better buy-in point on a practice trade. Okay, we're going to leave Bitcoin. We're going to go to real estate. Check it out. Real estate up 0.95% for the day. Now we see the price percent oscillators heading up, derivative oscillators still losing upward momentum. Started the week off with a red spinning top. Actually a solid red one. So that's showing you what we're seeing on the Heikin-Ashi candlesticks as the average pace. Let's go to the 2-day chart. Still hasn't had enough energy to cross over. We're waiting for a 2-day recross to jump into real estate if that occurs. Now again, this is just one day. One day of up movement doesn't mean that everything's good when the weekly is still where it is, okay? So again, pay attention. We want to see a 2-day recross before we jump into anything. What about the 4-hour or the half-day chart? Look at that down movement in the morning, slamming down in the morning and then recovering in the afternoon. You want to talk about a seesaw? So again, watch. If you have a 2-day recross, it might give you the ability to go long on real estate because the weekly is still technically up. We look at that price percent oscillator, it's going up. Lastly, we go to oil. Oil up for the day 0.95%. Now, friends, we had that weekly vertical crossover going up in oil back on the beginning of July. That was the week ending the 2nd of July. Remember, we were off on the 3rd for the 4th of July holiday, so that was a short week, but we did have a weekly vertical crossover. And of course, somewhere, around the 28.31 mark, of course, it reached its high last week of 30.22. And again, starting the week off with a green up candle, but not reaching a higher high. Go to the 2-day chart. And of course, that price percent oscillator is about flat, and we have a doji forming, means indecision, tending down there. So watch that, pay attention. We see where things a little hesitant in the morning, but popped up in the afternoon on oil. That's where we are, folks, as we end the day on Monday. Again, another exciting week. You know, summertime is usually the crappy time in the markets. We're so bored, we want to slam our head against the wall. Not so this summer. It has been a great summer. That old adage, sell in May and go away, live to trade another day, that didn't happen this go-round, did it? Thanks to COVID. Well, there's always a silver lining somewhere. My friends, thanks so much for being with us. We love to hear from you. CW@chartingwealth.com. God bless, all the best from the whole team at Charting Wealth World Headquarters.